Good afternoon. It's John Mousseau. I'm the President, CEO, and Director of Fixed Income at Cumberland Advisors. It is Wednesday afternoon on December 23rd. Very quiet week in fixed income. The 10-year and 30-year bonds are exactly where they were where we left last Friday. And basically that is a 95 basis points on the 10-year bond and a 170 on the 30-year bond. Really not much movement, but we did dip down in yields Monday and Tuesday, came back. Why did we come back? Easily. They finally passed a stimulus bill. Whether the president signs it or not, we will see. From a Muni bond standpoint, where yields didn't change at all this week either, because there are no deals. For Muni bonds, it's not what they would want. It's not the direct aid to state and local governments that we were hoping for. So the benefit to state and local governments comes on a secondary basis from the economic aid that goes to some individuals and businesses, and hopefully that, works its way down to the state and local government level. However, we are focused on January 5th, 2 weeks from yesterday, when we'll have a Senate election in Georgia, 2 of them. If it goes both ways for the Democrats, they will hold the Senate with the tie-breaking vote going from the vice president. That's important because it doesn't change what we think will happen next year, but might change the speed of the markets to basically accommodate what's happening next year. Because our viewpoint is, number one, that you will start to see more spending out of the next Congress, even with a Republican Senate that might be in place if you get a split vote. If you get a Democratic vote, you'll get more spending faster. We do think there's a honeymoon period for President-elect Biden to get more spending in place. So we think you could see a deal that will include aid to state and local governments as you get into early next year. So we are looking for that. More importantly, as you get to a vaccine, and we are at a vaccine level now, and I would suggest that the markets are not discounting COVID as ugly as the situation is out there. The markets are discounting recovery with vaccines, that you will start to see the amount of spending go up, particularly as you transition to a vaccinated population. You will start to see the turnover of money pick up. That will not necessarily mean inflation, but it could mean the perception of inflation, and that, of course, can impact bond yields. So we'll be watching that closely. We look a lot of times at anecdotal evidence too. And the anecdotal evidence points to what we think is basically a American tradition going back to every crisis we've been through, and that we come back. You need no better anecdotal evidence for that if you want to look to try to book a cruise for 2022, aren't too many discounts out there. They are looking already down and around the corner at a different economy. Go try to book reservations up at Saratoga Racetrack up in New York for this summer. Not happening, booked up. So the American populace is already looking ahead. They are not taking a toe in the water approach. They are taking a gentleman start your engines approach to this. We think that's going to be very beneficial to the economy as we get into next year. We'll be watching, of course, the Senate elections at the beginning of January. And most importantly of all, we thank all of you for watching us during these very trying months of 2020. And we wish you nothing but great holidays and a happy new year. And thanks for being with us, and we'll see you again soon. Thanks a lot.
Hi, Matt McAleer, December 23rd. Just a quick note as we head into Christmas and the holidays. It was nice to see volume and volatility take a little break this week. Why do I say that? Why do I say it was nice? Because this year has been incredible volatility-wise. If you've traded these markets, primarily equity, but bond also, John had his hands full in the spring. If you traded these markets in a reasonable way, never getting too high, never getting too low, then you really earned your spurs this year. Why do I say that? Why does Cumberland say that? We like to measure volatility in plus or minus 2% days in the S&P 500. That's a big move when you think about it. The average plus or minus 2% days in a given year dating all the way back to 87 is 16. By the end of Q3, we had 41 already this year and have tacked on a couple more in Q4. So when you're talking about mid-40 number of trading days with what we like to consider extreme volatility, plus or minus 2% days, then you've really had to keep your head. You've had to have levels that you were comfortable putting money to work. You've had to have levels where you're comfortable taking money off. Always keeping an eye on risk. Remember, when we're trying to allocate, when we're trying to talk about capital, positive returns take care of themselves. The upside tends to take care of itself if you and we can control the downside. Climbing out of that deep bucket is what hurts people year in and year out. So we'll continue to keep an eye on risk. Things seem a little bit frothy here, but in terms of breadth and capital allocating itself away from the NASDAQ 100 and S&P 500, those powerful top 10 and 12 names that we're so familiar with, as it's moving into different areas in the mid and small cap and different areas in the sectors and industries, that gives the equity market some more support underneath it. Certainly heading into Q1, we have to be cognizant of some of the speculative activity we're currently seeing in the call market on the CBOE. Remember, let's go all the way back to what's speculative. Speculative is buyers and sellers of contracts under 20. That's the speculative buyer and seller. 2 weeks ago, over 29% of the options traded were of that nature. And they were calls. It's a lot of speculation in the call market. That tends to be a signal that the upside from there may be limited. Maybe the market needs a reset. Maybe it's only 2 or 3%. Maybe it's 6 or 7%. Maybe it's more. Don't define what you're expecting from the equity market. Watch, analyze, and react. So everyone have a great Christmas. Happy holidays. Let's get 21 off to a great start. As you know, you can reach out and contact us with any questions on your accounts or friends that are not clients, questions on our videos. Both John and I are happy to reply. Visit our website to sign up for any of the newsletters that we put out. Thank you.